Our very last show of 2024 was the year of humility. I sing your praises, Matt. You get a lot of things right, okay? And we always make sure we point it out when Matt says something in that egghead brain of yours that comes out right. But I have to say, we closed our last show with you saying multiples are pretty high. You're expecting maybe a little bit of a cool down for a little bit. You don't see them getting stretched much more. You're not putting new money to work. That was January 10th. We're sitting here today, January 24th, year of our Lord 2025. You called the bottom. It is up 4.77% as we speak right now since our last show. So that's not a question. That's just a little bit of egg in the face there. I just want to say sometimes Matt does get it wrong. That's why, if you pay attention, at the end of every show, we say this is not investment advice or financial advice. We are only here for your entertainment or amusement purposes. And that's why, because Matt is wrong sometimes. It hasn't happened yet, but it did happen this time. So I have to point that out in full disclosure.
Yeah, I thought we were going to see sort of a 5,600 number in January. I don't think we're going to get that. However, I do see some consolidation happening here next week. Next week is a massive turbulent week, and there is likely going to be a move down into the 5,600 range. Like I said, sometime between the beginning of the year and March 15th. There usually is. February is usually a pretty bad month, but anything can happen, and no one wants to time the market. It's more about pricing fair value. And I think it will be probably a good opportunity to put some money to work next week. Two big things. Obviously, earnings are next week. And every single piece of good news is baked into this market right now. And you can see the market had this little sort of mini parabolic move, very similar to the election. What it was the inauguration. We got another bunch of speeches, pro-business, deregulation, and there's this another little bump in this sort of this Trump honeymoon. And as that starts to fade away, I think there'll be some opportunity. Earnings next week. We got obviously it's a big week of earnings next week. We've got Apple, Microsoft. I think Google's a week after. Amazon, Meta, Nvidia is not for a couple of weeks. Okay. Boeing is next week. Of course, they announced yesterday. That's my pick of the year. Now I'm absolutely going to double down on my pick for the year of Boeing because they wrote everything off they possibly could yesterday, pre-announcing what the street was losing $1.80 a share last quarter. This quarter last year, they lost 47 cents a share, which means there is a 283% increase in loss year over year. Okay, great. Well, they went ahead and decided to pre-announce a $5.46 a share loss, which is a 1,064% increase in loss year over year. And you know, the stock is holding. So I think a lot of that, there's so much bad news priced in. Everyone hates it so much. This is just when you got to own it, because if you can write off the kitchen sinks, your grandma's wig, and everything else involved, and it's down, I think, 1% or 0.5% today. That means a lot of that was already priced in. So hopefully, if they can stop, doing what they're doing and turn and actually make money. I mean, they're supposed to make $1.07 this year. If they can actually do that, I don't see how they're going to make $1.07 when they're now basically
$6.50 in the hole.
$4 behind the Well, actually, I take that back. This is a Q4 2024 number. Their 2025 earnings are $1.07. So maybe they wanted to get this one out of the way, you know what I mean? So they could actually maybe exceed earnings estimates. I don't know, but hey, this is one of those things where this is when you buy. But again, we've got Apple consensus is $2.35 a share last year it was $2.18. So, about an 8% increase year over year. Microsoft, similar, $3.11 a share to $2.93 a year ago. So about a little over 6%. Those are kind of your blue chip techies, right? Google looks strong at $2.12 a share. It's almost a 30% increase from last year. Amazon, $1.48 a share is consensus, 48% increase over a year ago. So it's, that company is just absolutely knocking the cover off the ball every which way they can. Meta, same thing as Amazon, about the same as Google, about a 29% increase year over year, $6.84 a share is what we're looking for next quarter. Nvidia, the big one, the Louisville slugger of it all, 84 cents a share on a 52 cents a share last year. It's about a 62% earnings growth year over year. So when we bought it, we always like to buy it. And so at 30 times earnings, you're buying it at a 0.5 peg. with actual growth. And we don't see any slowing down of this. It might cool down to 40%, 35%, 50%, whatever. But that's a 61.5% year over year. And that's just the consensus estimate, which means they're probably going to post, $1 a share, which could be, you're talking about an 80% growth year over year, and on a $3 trillion company. So that's just we're just going to maintain that position. That is our biggest conviction position. Although it's not my contrarian pick for the year, because if you don't know NVIDIA is a good buy now, well, I think I'm going to quote The Simpsons now. You've been in Mars living in a cave with your eyes shut and your fingers in your ears. So, but we have, on top of earnings, with a lot of big estimates are in there. Okay. A lot of earnings growth are baked in, as we can see now. Huge earnings growth this year, or this quarter. We've got FOMC next week. We talked about this a lot in the fall, that the Fed has kind of pivoted away from the inflation number more to the labor number, right? They're really concerned. They want to make sure that they don't overdo it with labor. They don't want to make labor get too much slack in labor, because they don't want to have to unring that bell and bring labor back. But labor got tighter. So I think you're going to get a surprisingly hawkish Jay Powell on Tuesday. Okay. I think that could move markets down and kind of provide that buying opportunity that we're looking for. My guess, there's going to be some key words that the streets are really going to focus on in the press conference. And I think that key word is pause, maybe hold. We have signal. The labor market's tight. Inflation has cooled. And the last thing they want to do is reignite inflation. Okay. So my guess is the street is going to price in during this press conference maybe one less cut for the year. And that could be, that could cause some turbulence. So, but again, the market it'll probably bring the market back to kind of where it was about the election, about that 5,900, 6,000 range, which is about normal. So there's just too much earnings growth. There's too much optimism. There's animal spirits. They're like, put me in, coach, put me in, coach, put me in, coach. This thing looks like, I don't think it's going to take off yet, but it's getting there. Okay. And when it goes through another a turbulent cycle, through an earnings cycle, through an FOMC meeting. But if we get into February and we get a cool CPI number and we don't get an overly hot jobs number, jolts don't come in too high, anything like that, I think we could actually have a pretty good February. And I'm going to maintain, I think we could see a really strong run up in through the summer, and then, have your typical exogenous, whatever takes place. We always have that kind of that weak period. It's more of a cycle thing too. We get a 10% correction or so, north of a 10% correction about every year and 3/4, right? About 1.8 years. And about August will be 1.8 years since the last one, which was October of 2023. So it's kind of, there's a lot of, cycle composites in this, and a lot of, farmers almanac or stock markets almanac kind of thing going on. But, I don't think it's out of the realm of possibility that the market, the animal spirits could just be released after, especially if earnings are strong.
As always, the Intelligent Investment Show is for your entertainment, education, and general amusement purposes only. It is not intended to be financial advice or investment advice of any kind. Neither Matt nor I or any of our companies or associated entities know anything about your financial circumstances, so it would be unwise for us to tell you what to do with your money. We encourage you to seek a professional if you do have questions about your portfolio or your financial plans. If you would like to reach Matt and his team, you may do so by giving him a call at 702-655-8300 or visiting intelligentinvestment.com. We thank you for joining us. We'll see you next time.